Hi, everybody. And yeah, hello, everyone. Welcome to the latest Soul-Trader.biz Google Hangouts. And with me, Rashid Ogunlaru. Welcome to Soul-Trader.biz. And if you're watching us either on the Soul-Trader.biz website, or you might be watching us live or on playback via YouTube and Google Hangouts. And I'm very, very excited about tonight's special webinar, web talk, with my very, very special guest and one of my favorite business people, Heather Darnell. Heather, welcome.
Thank you, Rashid. Good to see you.
Yes. Now we're going to be talking all about money.
One of my favorite subjects.
Fantastic. Well, you know what, Heather, I'm so glad that you're here to talk to us, because I felt that we're now into April. We're now into the new financial year. The old financial year is finished, and lots of people have got letters saying that that they need to do their annual returns and all this kind of stuff. And I do know when it comes to running a business, the finance side, especially when it comes to all the accounting, reporting, and what you need to do and when stuff, can be really overwhelming for people. So I really wanted to today touch on some of that, some of the compliance stuff, but also just to talk about another issue which lots of people kind of struggle with, which is the profitability side when you're running business, especially for lots of people who are running lifestyle businesses or people who are passionate about making a difference in the world. Very often the finance side is something that they is secondary to them, and then that stuff around changing your mindset. So I wonder, for those people who don't know you, I wonder if you'll just introduce yourself and just tell people a little bit about what it is that you do.
Sure, I'd love to. So about 11 years ago, I started up a business whose sole aim was to help small businesses succeed on the financial side, to bring some of the financial nous and knowledge I gained over the years working for big companies, but bring them to small businesses, really the people that don't have that kind of knowledge. So what we do is we do accounting and bookkeeping for small businesses in London, but really fun-wise, we do lots of consulting with them, either training them up on how to understand their finances or read their financials, and also help them expand or grow. It's usually really dangerous times for businesses when they're expanding and growing.
Right.
So a lot about what you talked about, cash flow, compliance, all those sorts of things.
Right, right. And it seems to be, I mean, do many of those business owners wrestle with the kind of things I've touched on, that either that they feel the compliance, it can be complex, or not knowing where to start, or, or just worried, or just feel as though they're not financially savvy?
Well, yeah, I mean, you've got two very separate issues, and one of them is the lack of knowledge out there about what it means to run a business. What deadlines are there? Who do you have to tell what at what time? These aren't things that you're taught at school, and frankly, none of them are commonsensical. And even if you try and Google it, there's an awful lot of information out there. So you're right. First and biggest struggle for people is understanding what their responsibilities are.
Right.
And then the other side of the equation, you're right, about the being financially savvy. Again, because it's not something taught at school, and usually the only experience people have of managing their finances might be their personal money,
right.
It's another step function up to try and manage the finances of a business.
Right.
For people to understand what it takes, and there's also a lot of jargon in the business finance world. You know, people talk about your margins or your EBITDA, and what's the difference, gross profit and net profit? You know, how are people supposed to learn these things? So you're right, they're two really common things people struggle with.
Right. Okay. So as we're beginning, and that's, I'm just going to say, and I can see that we've got some viewers who are watching us now live. As we go through this talk, you can get involved. If you've got a question, or if you want to ask something or make a comment, you can just like our Facebook page, which you'll see a link to beneath the text here on the Soul-Trader.biz page, and post a question. I'm going to be multitasking here and clicking onto that Facebook page from time to time as Heather's chatting and as we're having our conversation. So, well, Heather, what you've said there is kind of in a way good news then, that that it's not necessarily automatic that we should necessarily know these things. We're not necessarily taught them about them at school. So I guess the first thing to say to people who are scratching their heads and often find this difficult, whether they're starting out or if they've been in business for a long time, you're not alone.
Yeah, no, you're absolutely right. And even if you've got friends with small businesses, if you've got different structures of your businesses, you're going to have different deadlines. So it's not just about there's one and only one way to do it, and as soon as you learn that, you never have to think again. Everyone is different.
Right.
So yeah, it's really important to find out what those key dates are for you, put them in your calendar, understand your responsibilities, and then you kind of have a weight lifted if you know what, I don't need to think about anything for another 6 months or whatever.
That's a really good point, and I think that's a really good place for us to start, really. So I guess it's really good timing. We're now at the start of the new financial year, and some people may already been prompted about their accounts and something a bit before. Can you just, in headline terms, just walk us through this bits about what the key bits of compliance that people need to do? And I know that for people who are wanting to know more after you've talked about this, they will also find the longer talk that we did where we went through this with on the whiteboard there at your offices at Boss, so they can also watch that back again under the business impact talks. But Heather, give us the headline stuff about all this compliance stuff. So what are the main things to do?
Well, it's a really good point you brought up. You said it's the start of the financial year, and I think a lot of people recognize that the personal tax year in the UK runs from April every year to March the following year. It would be a lot easier if it was the calendar year, but it's not. So if you run a sole trader business, if you run your business as an individual, then the only dates you really, really, really need to know about is that your year end starts in April, it finishes in March, and you need to submit your self-assessment tax return that includes your business profit report by the 31st of January every year. So for the year that just finished a few weeks ago, you're going to need to submit your final return on the 31st of January to HMRC. And actually, that's the only place you need to submit it, to Her Majesty's Revenue and Customs. That's it. It's done on your self-assessment tax return form. There's a special page you fill in if you run a business, a sole trader business. And you need to pay your tax for the past year on that date, the 31st of January. You'll also be asked to pay an advance payment on your next year's tax on that date, and also on the 31st of July. So those are the only dates you need to know if you're a sole trader. Tax return in by the 31st of January, tax to be paid on the 31st of January and the 31st of July.
And as you said before, put those dates in your diary so that that's something that you know, because you're not going to be shocked about it next time. So you know your tax year runs, it says March to April, 31st of January, you pay that, and then you're up to date. And when you said, when you talk about that self-assessment return, I guess that I want to say here at this point, when it comes to your finances, I guess there's kind of two decisions, isn't there? Do you, if things are very straightforward and you're very financially savvy, do you do that yourself? Or do you have an accountant or someone like Boss that can help you to do that? I guess that's the one thing for some people to think about. I'm sure we'll come back to that. But if I guess I want to say, if people find that they struggle with that, then engage an accountant and get somebody to help you, and that therefore, so that you've got somebody advising you on that, so you don't have to worry. And anything you want to say about that, Heather?
Yeah, and it's a good point. There's very few business structures where the accounting compliance is simple enough that a non-professional can do it. And sole trader businesses can be one of those that you can do yourself. Now, you could try and just read the paper and figure it out yourself, but what I highly suggest, if you want to go it alone, is sit down with an accountant first, have them train you on what you need to do, and then that will give you the confidence to do it yourself. If you're not interested in numbers, or it's not something that you want to spend any time on, if your time is better spent elsewhere, absolutely get an accountant to help you.
Brilliant.
But as soon as you move on to, say, becoming a limited company, you cannot do your accounts yourself, really, unless you have had a lot of financial training, because you have to come up with a balance sheet. You've got to disclose all these things you might never even have heard of, your creditors, your debtors, your long-term liabilities. And that's really where most people do have to go to an accountant.
Well, this is a really good point that you're saying, because I think that when people make that decision, perhaps that they are going to be a limited a company, either at the beginning or later on, they might just try and, because of for financial reasons, try and do everything themselves.
Yep.
So what you're saying here is really, really good advice. As soon as you're doing that, unless you're very, very comfortable with that, that's the time when you need to get an account. So you need to know what you're doing, because I guess the problem is if you get it wrong, you can be in all sorts of trouble, and the tax people are very quick to find. So will you walk us through then what, broadly speaking, are the headline things that people need to be aware of in terms of compliance if they are running a limited liability and company? And again, there's the more detail on our previous video for people who want to look that up here on the website.
Yep. There are just a couple of more deadlines you have when you're a limited company. You still have to do all the things we just talked about as a sole trader. You still need to submit a self-assessment tax return by the 31st of January every year. You don't have to fill in that page about your sole trader business, but you do have to fill in a box about the profits you've earned from your company, and you pay tax on it on the exact same dates, 31st of January and the 31st of July. But in addition, you've got two more deadlines as a limited company. One is a really simple deadline. You've got to report to Companies House, which is where you may remember you registered your company in the first place. You have to report to them once a year and pay £13 to keep your company on the register of companies. It's called your annual return, often confused with your annual accounts. It's something completely different. It's an annual return, and that has to be done on the anniversary of when you created your company. They give you, I think, 4 weeks to do it. So say you created your company on January 1st, you'll have till January 28th the following year to submit it. Very simple form, easily done on Companies House website, but put it in your calendar, because if you don't submit it in time, you do get a little black mark against your name on their site, and people can see that you've been late.
And again, I think from even what you've talked us through, Heather, which has been priceless, and I didn't learn all this stuff until probably several years in business, this thing about finding out what those dates are, putting them in your diary, chatting to your accountant, getting them to talk you through those things, that you're clear about what you need to do and when, so that you're ready. You can begin to plan, you can begin to prepare.
Yeah.
Are there any other headline things that you're wanting to say?
There's two more big deadlines on the limited company that I have to mention. The first one is you've got to submit your annual accounts, not your annual return, but your annual accounts, which is that financial statement we talked about before that has not just a profit and loss, but a balance sheet and a lot of supporting notes. That has to be submitted to both Companies House and HMRC 9 months after your company financial year end. And this can be confusing because your company financial year end is not necessarily the same as the personal year end. So you can have a company that runs from August to July every year, or from January to December. You need to put the date in your calendar that's 9 months after your year end is when you need to submit your annual accounts. And then the final thing you need to know is, when do you need to pay your corporation tax? Corporation tax has to be paid at the same time your annual accounts go in, but for some obscure reason, you don't need to submit your corporation tax return. You've got another 3 months to do it. I don't know anyone that submits their corporation tax return 3 months later. Everyone does it at the same time, but you do have a little bit of leeway.
I think that this is, I mean, what you've said already, one of the things that really strikes me is that it is complicated, and I can understand why so many small business owners end up pulling their hair out, and why it's so important to just understand some of the basics and get good advice and so on. I mean, is it?
And
I mean,
it's not common sense. People should never beat themselves up for not knowing these things offhand. No amount of common sense will let you know where they are. You need someone to just tell you, and then you write it down, and that's all you need to. That's all you need to know. Right.
Those people who additionally are VAT registered will know, VAT registered, will know that that's something that is paid quarterly, and that those bills come along as and when, so that they also need to be putting money aside from that. But are there any headline things that you would say, mindful of the compliance, in terms of reminding people to obviously put money away, that the money, that all the money you're making from the business, you are going to need to pay tax and so on, and then and any additional fees for your accountant and so on, and to put money aside for that. Anything you want to just briefly say about that, Heather, so that people...
It's a really good point, because one of the biggest problems that small businesses run into is cash flow. And some of that is just due to, as you say, lack of knowledge about how much you need to keep behind to pay other people. So VAT, as you mentioned, is one of the simpler ones. If you are VAT registered, which means you've got to charge VAT to all of your customers, as a rule of thumb, whenever your customers pay you, you should take the VAT portion of that receipt and put it aside. Put it in a savings account, or at the very least make note of it. That's not your money.
I like when you say that. I like when you say that, because it's so good, isn't it? Because sometimes, especially if somebody's moved from being a sole trader or to being limited company, or being a limited company and not paying VAT because you don't until you're earning 80K or whatever. But sometimes that could be thinking, oh my goodness, that's great, we're now making more money, but it's not your money. You are being a tax collector on behalf of the government. So don't spend it, put it away, or make sure you know what it is so that you don't get caught out, because otherwise, presumably, especially if then you're doing really well financially, that you can then suddenly all of a sudden get caught out, as you say, and then find that you don't have the cash to pay these kind of bills or to keep your business running.
You're absolutely right. And it's one thing to owe HMRC money and be late, and there's ways you can kind of deal with that if you find yourself in that situation. But psychologically, it's really hard to have debt like that hanging over your head that you haven't planned for. It really takes your mind space away from running your business. So it's just good to remove it from the table entirely. When you collect VAT from a customer, put it away. And it's the same for either corporation tax or your personal tax. And in terms of how much you should put away, that's a harder question to answer in general, because it very much depends on your situation. And again, really a good 15-minute conversation with your accountant, they should be able to tell you how much of your sales, for instance, or your cash you should be putting away for those things.
This is a really good point. And again, I really do urge people to sit down, have that conversation with the accountant. What do I need to know? Roughly how much should I be putting away, and so on? Because I think that what can happen, I know we started off about compliance, but I think one of the problems is that sometimes we only see it in terms of compliance rather than planning, which is what we're going to move on to, so that you're wanting to be aware of that so you can actually plan. I wonder if then that's a really good moment then, Heather, to begin to talk about this thing around profitability and cash flow, because of course that's the lifeblood, literally, of your business. Anything that you're wanting to say, just as we begin to step into this space, a top line about cash flow?
I'd say there's two really important things to understand about your business to help you have a nice flow of your cash flow, and to understand and plan for your cash. And the first one is to understand the difference in your business between the fixed costs that are going to happen every month, whether you like them or not, and your variable costs, ones that actually go up and down depending on how much you sell. So fixed costs, for instance, are most everyone has to pay their mobile phone bill every month. Last time I checked, EE and Vodafone aren't very good at extending you long credit. You've got to pay it whether you like it or not. That can also mean rent. Not everyone pays rent in an office or desk space, but if you've got to pay that, that's a fixed cost, no matter how much business you have in. So it's really important to kind of tot up, sum up what all of your fixed costs are, and say for your business it's £1,000 or £10,000, whatever that number is, that's what you need to be really comfortable that you've got enough money set aside for to pay, regardless of how many sales you're doing.
I think that's so important. And whilst it can sound really simple, it's absolutely vital, isn't it? You know, what are those fixed costs? And actually, are you selling enough? Are you generating enough? Or how can you be generating enough to know that at very least you can cover those particular costs? And I guess within, and also as part of that, what are your living fixed costs? How much money do you have to make to be able to live on? And in terms of any other fixed costs, that the rent or the thingy or the bills, as you say, that have got to be paid, because otherwise otherwise you're going to be in trouble very soon. And I guess the good side of that, it makes you very focused that come what may, this is how much this business needs to be turning over.
Yeah, absolutely right. And if you run something like a service business where you sell your time, it's really easy to work out. If you know that you need to spend £4,000 every month on your business and your personal life, and the only cost you have of providing a sale is your time, you know that you need to sell £4,000 worth of your time every month just to break even. And then another thing that people quite often get wrong is if we're just talking your business expense, you need to cover your business expense of £4,000. Anything you make above that, though, say you make £5,000 of sales, that doesn't mean you can take £1,000 out of the business. Because number one, you're going to have to pay tax on it.
Right.
And number two, you may very well want to keep some of it in the business to cover some future fixed costs.
Right. Really good points here. Really good points here. So know what those fixed costs are, so you can make sure that you're hedging that. And then when your sales are over that, be mindful that that extra 1,000 or 10,000, whatever it is, that's not all your profit. There's going to be tax and all sorts of other things, running costs that you're going to need. You touched on variable costs, and I would imagine, therefore, Heather, the variable cost thing can be more tricky. And generally speaking, of course, the more your business grows and the more things are happening, you're probably going to have more of those variable costs too, right?
Yeah, you're absolutely right. I'll give you two examples of variable costs. One really common one is where you make something. And so if you're making something, it's not just your time you're selling, there's a cost to everything you make. Whether you're making sweaters, you've got to buy the yarn, you've got to make sure you've got the needles, and you may even need to pay someone else for their time to help knit them. You might also have packaging and labeling costs and bags that you send people off with when they buy their lovely jumper from you. So to understand for every £100 sales you do, how much of that £100 have you already used to make the product? That's really important. So just to make the math easy, say for every £100 sweater you sell, you've spent £50 to make it, then that means your variable costs are 50% of your sales. So back to our example of needing to cover £4,000 of fixed costs, you would need to do £8,000 of sales, give up half of that to make your product, leaving you with £4,000 left to cover your fixed costs.
Right.
That's one example of variable costs.
Right.
There's also variable costs involved in service businesses, though, if there's someone other than you providing all of the service. So a typical trajectory for a small business of someone who started out on their own, let's say you started an accountancy firm, best possible thing you could do. It might just be you doing tax returns. You've got no variable costs then. But as soon as you have more work than you can do yourself, you normally don't hire an employee right away who would be a fixed cost. You instead might outsource some of the work. Someone might charge you £20 an hour to help you with it. That's a variable cost as well. So be mindful, it's not just things, it's not just raw materials and products, it can be buying in other people's time.
Right, and those kind of, presumably, you know, as many businesses will have, you're designing on brochures, or you've got somebody who's doing those bits of work for you. Those are those kind of costs that will come in and from time to time, depending where you are with your business.
Yeah, and actually you bring up a great point. If you are about to sit down with your pencil and paper and you're going to write down all your fixed costs right now, invariably you're going to be thinking, well, what have I spent in the last month? You know, what do I know is coming up this month? There are lots of costs that are a bit more periodic. So for instance, getting marketing material printed, you might only do that once a year or once every 2 years. There are some annual costs that you might forget about because you haven't had to spend it in a while. So it's really good if you've got a really robust way of tracking all of your expenses, to don't just sit down and think, what have I paid recently? Go back and look at that history and see what are those more periodic costs.
And again, what I'm really hearing from this is where it comes into planning. And I don't want to make this kind of overly technical, but that's why people will be doing budget forecasts and all of that. And I think one of the things that really strikes me is that, I mean, when you talked about what it is that, for example, that your company did, I thought it was really interesting when you touched on, of course, there will be all the accountancy and bookkeeping kind of stuff, but then that advice and guidance and sitting down with business owners to help them understand what's going on in their business. So something like this would be really good to sit down with and work out, you know, what are those costs, what are those fixed costs, what about those variable costs, what is that you're looking to do and achieve, what costs might be coming in, so that you're able to plan. And so I think one of the things that I want to flag up here, Heather, is that when it comes to planning, very often people will be thinking about, there might be spreadsheets, or now all sorts of software that can do all sorts of stuff. And I think, again, one of my observations is there are some people who are very, very comfortable with looking at a spreadsheet and so on. Then you get people, some other people, and I'd admit that I'm one of them, whereby looking at a spreadsheet isn't the best way for me to look at data. It takes me a long time to be able to identify. So what I personally do is then, in my own way, work out, and fortunately I can, because the numbers are straightforward enough, to then sit down and then think in my own terms and write it down. Okay, how much am I making? Blah, 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 blah. I have got some spreadsheets too, but keeping it simple. I think the point I'm wanting to make here is that as a business owner, it's your responsibility to find out what works for you, and how it is that you can keep track on and plan to the degree of detail that you need to, for you and your business and for your own comfort and curiosity, what you need to know. Anything you want to say about that? Because I imagine it comes up a lot of the time.
It does, and again, it's a great point you bring up, is that everyone's different. You know, I like to think that everyone loves Excel as much as I do, but they don't. And you know, some people really get a lot more meaning out of whether it's a graphical representation of their numbers. I mean, I know some people that can live and die just looking at pie charts, and they can get as much learning and data out of that as I can with, you know, tabulations of numbers. Important to know what will help you, and don't let an accountant, for instance, bully you into only looking at one way of reporting. And for instance, the reports you've got to produce for HMRC are so non-commonsensical, they're not going to help man nor beast run a business. It'll never happen. So it's about finding out what's important for you. So take, for example, it might not necessarily be a financial statement that you look at on a week-to-week basis. It might be your unit sales. It might be your credit card till receipts. It might be your sales pipeline. You know, every company also has different, what are called key business drivers or key performance indicators. For some people, it's incredibly important to know what their gross profit margin is. For other businesses, that's completely unimportant.
This is such a good important point that you're saying here, Heather, and I want to touch on it. I think you've said something that's really important, because as we're here in this space of beginning to plan, so we've talked about the compliance stuff, and then we're talking about profitability, and you touched on, you know, we need to know what the cash flow is, because the cash is how much cash is flowing in and out of your business, and then beginning to be able to plan by knowing, okay, what are those fixed costs that are going on all the time, and then what are those variable costs that vary. And then you're into this, we begin to explore this really interesting area about, okay, well, how do you kind of measure and know what's going on in your business? And different people will be different. And it's really interesting that I think that one thing that I'd say at this point is, in whatever way works for you, get interested in the financial side of your business. Now, that might well be, on the one hand, that it's that you're excited by knowing how much sales that it is you're making, or that new product, or it might well be about, you know, today it was really interesting. I was thinking that, unfortunately, as we record this, there's a disaster in a particular part of the world. And I thought, okay, let me go and give some particular money. And I realized that I could go into a particular account, pay some money, and do a little bit. So I think that the thing here about money is that you've got to begin to develop a really good relationship to it, to realize that that is what keeps your business running. And then whatever way works for you, to begin to be interested enough that you can then take charge enough to begin to work with this data.
It empowers you to know the state of your finances. And it does that in a couple of different ways. I've talked before about there's a real weight on business owners' shoulders about worrying about money. and maybe not knowing where they are and worried about a tax bill that's coming up. That weight gets lifted just by knowing what the figures are and knowing when you need to pay what amount of money. So first of all, although it may not be your favorite thing in the world to do, it's so empowering to not have to worry about it.
Right.
The second reason it's empowering is that you're able to make all kinds of decisions with confidence if you understand the financial state of your business. I get asked all the time, when can I afford to hire my first employee? When can I afford to go get an office? When can I afford to branch out in this new area?
Right.
If you could afford to do it 6 months ago and you didn't because you didn't know the state of your finances, you've just lost 6 months of great new sales. Or even worse, if you've decided to take the plunge and you really can't afford it, you could scupper your whole business by expanding too quickly. So it empowers you to know and understand what those numbers are. And I do find that most people, when it's their own business, they're incredibly interested. People don't want to learn about how to read a balance sheet in general. They want to know how to read their own money, their own company's finances.
Yeah, it's really interesting, you know, because for me, this is, and I'm sure these two things will merge, but it really does bring us into this area, this third area around mindset around money and people's beliefs around money and so on. I remember that I think one of the things that I found interesting years ago is that I started to get interested in one of my favorite, well, I'll share with you, one of the things that I really enjoy doing now is that I realized, you know, we can get caught up in doing so many things in terms of our business, but of course the times when we need to do the reporting, the annual reports and the accounts and all of that kind of stuff, we suddenly realize the cold realities of how our business is actually kind of doing, don't we? It all comes home to us. And then I suddenly realized, well, I've got to start to begin to understand more about the financial side of the business. And then I began to learn to love the times when I was doing something that was finance orientated. So I began to love invoicing people.
Yeah,
because I really
that's the best time.
Right. So I realized that actually when I do an invoice, that relates to me actually being effective in what I do. So I'm sending an invoice, which means I get paid. Of course, I do what I do because I love it and to empower people and so on. But I had to make that connection between that's when I was being very effective. So the invoicing means I'm being effective, the business is doing well, and I'm going to get paid as a result of it. And I now do, in terms of what I do in my business, is that all the things that are money orientated, a potential customer inquiry or invoice or something, I'll do it as the very, very first thing in my day. Because then to me, it makes a direct link to the profitability and the bottom line of the business. And I think it's great that we call the finance thing the bottom line. So, I mean, I wonder, Heather, are there any of these general tips that you say to the people that you work with to get them empowered and to get them to feel more buoyant about the financial side and to take charge of it?
Yeah, it's really interesting to hear from you that you like doing it first thing in the day. Everyone's got their own time that works for them, and for some people, where if they really don't have a financial mindset and don't like working with numbers or have any kind of number dyslexia, they've actually got to work up a lot of time and effort to think about it. So for them, people like that, I always suggest you set aside either Monday morning or Friday morning, set aside one time per week to think about it. Whether it means emptying your wallet out of receipts, or whether it means getting all your invoices out to your clients, or checking your bank account, set aside a specific time every week. And another thing a lot of people do is that it's the first thing they bump. You know, if a client says, oh, sorry, can I meet you, you know, Friday at 9 a.m., if that's the time you've set aside to do your finances, it's the first thing that gets bumped. So if you can, it's very hard to do it, treat that little financial hour or financial 2 hour as important as a client. But for other people, as you say, it's not about setting aside a specific amount of time. It's doing little and often. So maybe every morning, as you say, spend your first 20 minutes of the day clearing off any of your financial stuff, getting invoices out, chasing people for payment, one of the most important things you can do.
Right.
And so it's different for every person, and it's about finding out what works for you.
Right. I like
know lots of business owners that will only work on finances on the weekend.
Right.
They don't like setting aside the quote unquote working hours to do it. This is often a real false economy because you start to really begrudge the time you're spending on your weekend being done for something.
Right. I think it's really powerful points that you're making here. What works for you? What time works for you? What way of engaging with it works for you? So you can begin to get kind of enthused about it and take that interest in it, isn't it? So it might be, I mean, what I'm getting from this call is, yes, there's some compliance stuff that you've got to do in a particular format for the tax man, the tax lady, and so on. But then there's other ongoing stuff about how your business is doing that you can work out the best way for you, and perhaps getting a little bit of support as and when from your accountant, that you therefore know what you do. I keep a particular document where month by month it's telling me how much money I'm making, which is separate to the spreadsheet kind of data that does that, because I like to see that information in another representation that is meaningful. Meaningful for me. I mean, Heather, I wonder if it would be good us spending a little bit of time. One of the things I want to begin to talk about is this key thing around profitability.
Yeah.
So we've talked a little bit about the planning thing. Okay, begin to know how things are going. Keep an eye on how the finances are, and I wonder if also from there, set yourself. I mean, before we do move into this area, or maybe it's crossing over. You know, set yourself those goals and get perhaps excited about seeing your business grow bit by bit. Anything you want to say? There about that side of stuff, because we've talked about tracking more than moving ahead so far.
Yeah, no, your talk about targets is brilliant, because it works for me in particular. I set a target for myself every quarter or every year, and I have a little chart right up by my desk that I draw on. I love seeing how I'm tracking against it. Right. And again, although, as I said, I love Excel and I love spreadsheets, it's such an easy visual reminder to see how am I doing against my target in any month or any quarter. So targets are a brilliant thing to do. Also, because most people go into business for a couple of reasons. Most of them are doing whatever it is they're in business for because they like that thing. That's important. But you also tend to do it for financial reasons. Either you want the financial stability of being in charge of your own money and not reliant on an employer, or you're excited about the opportunity to earn more money than you ever could as an employee, where there's a fixed amount. Right. So your financial targets should be part of why you're in business.
It's a really good point.
Yeah, and it's not a dirty topic. Some people say, oh, you know, I don't need to earn I don't want to be a millionaire. It's not like that. It doesn't matter what your target is, you have one. Right. Everyone should have a target about, you know, this is the amount of money I need to earn for me to be comfortable and happy, and this is my reach target if you have one.
I think that's a really important point to make and mention, especially here on Soul-Trader.biz, where, and I know you know many of these kind of people, because some of them will include your kind of clients. Many people who, and you were just talking about it, many of the people who will be watching this here on Soul-Trader.biz or elsewhere online, they're people who run businesses because they care, they're passionate about it. They might be lifestyle businesses, or they might be traditional businesses, but they're people who, it's not just about making money, it's about making an impact and so on. But nonetheless, there may well still be, as you're saying, financial reasons, independence, being able to work from home or to spend more time with the family. So I guess that the more you can begin to integrate all of these different goals, your independence, you making an impact with the fact that you're doing something you love, presumably then, Heather, that's also going to empower you to feel more comfortable and more keen to look at how the business is doing and not bury your head in the sand.
No, you're absolutely right. Very few people go into business only to make money, but also if you go into business without also wanting to at least make some money, you're doing it wrong. You know, it's not a charity, it is a business. So understand what that number is. Ensure you're meeting both your financial goals and your impactful goals, whatever the reasons are you set up in business. And don't think of the money as the untalkable side, as the dirty side. It's worth keeping that on a par with the rest of your goals.
Right. Let's talk then a little bit then about this thing about profitability. So some people might be watching this thinking, great, I now know I need to go away. I need to find out and write down those key dates about when I need to do my returns, when tax is due, etc., and the VAT dates and everything else, the self-assessment dates. I'm going to find that out. I'm going to put that down. They know that they need to think a little bit about those fixed costs and those variable costs, the thing about putting certain money away and so on. But let's talk a little bit about that thing then about profitability, because I guess that as people are moving forward with their business, it's going to be important to begin to make sure that business is profitable, maybe linked to those things around that you said about wanting to do more, setting those targets to see the business doing better and better. And I'd imagine, Heather, that there are some key things from your point of view with your old finance director hat on and running the business that you run, that are going to be key signs in terms of finance and profitability. I kind of wanted to just kick off by just throwing one thing into the mix that I first learned that when I started looking at my business. I remembered that for me, and this might be similar to many people's business, there's a number of different elements, you know, so there's some products and there's some different types of coaching products, there's different bits. So I do some workshops, I do some talks, I do some one-to-one coaching and so on. So, and there are certain bits that are more lucrative than others and that have that the costs are lower on than others, so that my margin, how much money I make on that, are greater than the others. So I began to realize, okay, well, which bits, what's the blend of these different bits that I like, and which ones are the ones that are most lucrative, and which ones do I enjoy the most, and how can I get a right blend? So I want us to begin to explore, how do people who might be not as financially savvy, or it's not their natural thing, begin to get that? They know they need to make a profit, but they're not quite sure about how they can become more profitable, especially if it's just them in their business. Can you give us a few pointers?
Sure. I mean, interestingly, you're talking about what's a pretty complicated setup, and that's a business with multiple revenue streams, or in other words, different ways of making money.
Right.
A lot of people just are in business and they do one thing and one thing only. But you have a really interesting mix of both service and products. Your service, you do a bunch of different ones. You do week by week, you do occasional workshops. So you've got a pretty complicated business. And it's really amazing to see when you break out the profit of each of those, which ones, as you say, which are the ones you're making the most money on and those that you aren't. You always have to overlay that with the ones you enjoy doing the most.
Yeah, I'm so glad you said that.
Yeah, because you may say, you know what, I make the most money out of my monthly recurring sessions, but you know where my heart is my twice a year retreats I do. And I'm willing to sacrifice some profit so I can continue to do that. There's nothing wrong with that, but you should know exactly what is that difference. Are you actually losing £2,000 every time you do one of those? Well, make that decision with your eyes wide open. Don't just hope that you make money at everything. So yeah,
I like this point. So I think that's an important point for people to begin to think about. So beginning to explore, okay, which bits are the most lucrative, but also which are bits that you enjoy doing. And I often wear this, what's the blend of different things that you're wanting to do, or different products or different services, or of your one product, or even different types or particular types of client. Understand that bit. And then I guess that then they can begin to look at, well, which of those different products are the most profitable? So when people come to you, Heather, and they say, well, look, I'm wanting to increase a profit, or, we've been struggling a little bit with profitability, what kind of things do you point people to look at so that they can help them begin to understand where there's room?
That's a great point, because usually at the point where someone's figured out they need to start thinking about this, that it is too late.
Right.
At the very beginning, if you set up, I hate to talk about bookkeeping systems, even though I love them. Most people don't. But if you're able to track from the very beginning all the costs associated with everything, don't just lump all of your travel costs in one. If you're traveling for workshops, track that separately from your travel for new business meetings. If you're needing to hire in some extra pair of hands to do work, track what project they were working on. So then after you've got enough history, you can look back and truly say what was profitable and what was not, what had a higher profit level than another.
Right, so just on that then, and for people who are newer to those terms, or even if they've heard terms there that they've known but for a long time. This is, I guess, the classic thing of bookkeeping. The bookkeeping bit is this thing which does track all these different bits of data from which then you get all sorts of information about what different costs, what different things bring in, from which the accounts are altogether built on. Is that fair to say?
Yeah, and the difference between all those tracking categories and categorization of costs and income that you've got to do from a tax return perspective, it's a much more detailed set that you want to keep for your own business needs. For instance, you don't need to report to HMRC how many sales you got from different customers or different regions, but you really want to know that. So be sure to set up your kind of tracking categories for something that's going to be meaningful for you.
And presumably that's a really good one there you've mentioned, because when it comes into this realm of profitability, I guess that one of the key things is, okay, who are your different customers? How much do your customers spend with you? Who have been your most loyal customers? I remember once, the years ago, when I began to look at, how much money had I made from different kind of clients out of curiosity. And I was stunned when I saw the facts, because there were one or two clients, individual clients, and then companies where I got disproportionately the most of my business was built. And therefore you can make all sorts of decisions about that. And it makes you really aware, because it might well be that you might be spending all sorts of time in places that are not bringing you the greatest yield. And I imagine that this is one of the key things to understand about profitability, right?
Yeah, no, you're right. And I will say that although it's really important to understand the different areas of where you earn your profit in your business, I will say that most people, what scuppers them or puts a big dent in their plan is not the profitability, it's the cash flow. Right. So I'll use an example. Let's say that you decide to kind of branch out in your business and you're going to produce a book. Book's a great thing to do, and you know that once you write it and you spend the time one-off, you'll then be able to earn profit in years to come without doing any more work. So it could be incredibly profitable to have a book, but you know what, cash flow wise, you've got all the expense up front, right, and you're not going to get the revenue in for quite a few months or even sometimes years to come.
I'm so glad you mentioned that. Yeah. I'm so glad you mentioned that, because it's a really important point, isn't it? This thing about cash flow with that, because I've been there, and I think many people watching this may also be creative entrepreneurs. So we enjoy creating things. And one of the things that took me a long time to realize is that I thought to myself, every time Rashid, you're going off to develop a particular project, which is great, and it might generate this or generate that or have this impact on people's lives, what's actually, where you're going to be earning the money that to be running the business on? Yeah. Because I think that particularly if you haven't learned that lesson before, all that time that you're spending developing something, actually, well, where is all the continual cash flow? So yeah, carry on with that point, Heather. That what are the things we need to watch out for here?
You want to be very sure that back to those fixed costs, or what I call your bread and butter. You've got to structure your business in a way. Now, not everyone's lucky enough to do this, but if you can, you want to structure your business in such a way that you will always do either your bread and butter work or your bread and butter clients consistently to cover your costs. And then when you want to do a new project or go on in a new creative direction or try something new, don't use up that core time or upset your core client base or customers in order to do it. Make sure you've covered your bases first.
This is such a good point. And I would imagine that even this advice applies to any size of business, because we do sometimes hear reports of it even on television, isn't it, where maybe a huge established business decides that they're going to invest in something or a new plant or something, and if they haven't got that right, and if it's taken a huge amount of cash, and then for whatever reasons there's a few shifts in the existing business, all of a sudden you can go from a lot of productivity into being into huge trouble. So I guess you can get into huge trouble if you're not watching the figures. I mean, I think we both know businesses who've gone to, because they've not watched the figures, they haven't done the compliance stuff, and they haven't really tracked the figures. They don't know when they're running into cash flow and problems. But then
also to bring back what we talked about earlier, if you're collecting VAT from your customers, and you see the money in your bank account and you say, oh, you know what, I don't need to pay that for another 3 months. I'll just use some of that to cover my fixed cost until the next sale comes in. That, I would say, is probably the number one reason I've seen clients get into trouble with their cash flow.
Really?
Using cash that really should be earmarked for something else, just to temporarily cover something else, and it snowballs really, really, really quickly.
Well, that's very powerful then, Heather. Are there any more of those things there that we should really be watching?
Yeah, I would say number one thing to watch out for on cash flow is putting aside the money that is not yours. The VAT, the corporation tax, your personal tax, your income tax, your national insurance. Don't spend that. Just because they give you a long time to pay it doesn't mean it's yours.
Right.
The second most common thing I see people doing that causes them massive cash flow problems is all about invoicing their clients. Now, this doesn't matter if you trade on Portobello Market and every time you sell something, you get the money for it right away. But for those of us that have to send invoices out to customers and wait to get paid, there are 3 critical things you've got to do that people don't like doing, and it gets them in trouble. Number 1 is getting your invoice out as soon as humanly possible. You know, don't wait until you've got a spare day to do it all together, you know, once every 6 weeks. As soon as you've completed the piece of work, get that invoice out. Number 2, ensure people have received it. Don't wait until it hasn't been paid to start chasing up. No one's going to be offended by a friendly, you know, email request saying, just want to confirm you received our invoice. Do you have any questions on it? Be sure to let us know. You're not chasing for payment at that point. You're just confirming they've received it. And then number 3, don't wait until it's late plus a few weeks. The second it's late, chase it up. And that doesn't need to be mean. There's all sorts of nice ways to chase. But for a lot of people, a lot of their clients are other small businesses, and they tend to pay whoever makes it known that they really want to be paid. And if you let things slide and let things slide and let things slide, they'll make it slide more. So
you know what's in... Right. Sorry, no, carry on.
I was going to say, I know so many clients that are profitable. They are profitable businesses, but they can't collect the money in time to pay the bills they need to pay. Right. So that's the second most important thing on cash flow management.
Right. I mean, that's so powerful. I mean, what you're saying now, we're heading toward the end of this fascinating conversation. So, I mean, again, it really does highlight this thing about why people would say cash is king. You know, this thing about, you know, turnover is vanity, profit is sanity, but cash flow is the real reality of where you actually...
Yeah, that's right.
So it sounds as though, and I think this will be very encouraging for many soul traders, SOUL, of doing what they're passionate about, or people where, you know, finance wasn't their original thing. These kind of financial issues that can be either really challenging to business or help them really move forward, they can happen to any type of business at any stage if they're not clever or canny or mindful about these issues in terms of they put that cash away. Obviously, some businesses will have that set up, but that invoicing straight away and promptly and making sure you've checked it and so on, and then and so on. I guess that's absolutely key. So I mean, that will be, presumably that's good news to people. If you can make sure you're doing those things right, then you're in a good place.
And my last piece of advice for all the soul traders out there is that everyone, I would say almost every accountant out there, would love to talk to you more about your business. They're not just there to make sure your reports are in on time. So what I'd suggest to all of you is that you engage with your accountants. Even if you've historically only talked to them once a year, change that right now. They would love to help you. They have such a wealth of knowledge because of the number of, you know, different clients that they work with, and they know your business as well. They can tell you the 2 or 3 things that you personally need to be very mindful of in your business.
I think this is such a good point, isn't it? And I think it links back to this overall, this mindfulness and the mindset stuff around that. And I guess that even if you've in the past, you know, not been as confident, or you're finding your feet, of course, nobody, as you often make the point, nobody's born knowing this kind of business math. So So if you can begin to make that step, that might be very huge. And I think that one of the things that can be very useful is having somebody who looks at a different lens. Somebody who can purely look at what the numbers say may well be very, very useful, because you might have the emotional and what you're enthused about. So it gives you a different a lens and a different set of eyes to look at your business, which might be really, really useful. Do you realize that this is what this means? This is what this is. This is where that's profitable. These are the more challenging areas. This is what this is. So it can be. That, I guess, can be very powerful, right?
Absolutely, absolutely. And again, I do find that most of you will all get excited about your own business numbers. You know, once you do get a handle on them and you know what they mean, and you see that connection from getting a customer in to working with them to sending an invoice and getting the money in, and then knowing of that money, how much you're going to get to keep. You know, what's going in your pocket at the end of the day, it really brings a smile to most people's faces.
Right, and I guess that's a really good point for us to begin to end, isn't it? That, I mean, I guess what I've got from this particular talk is that, you know, it needn't be daunting. Make sure you understand those key things in terms of compliance, what you need to do when, and when. Not only know it, but write it down, have it there in the diary. Do some planning. Now, understand what those fixed costs are, and watch what some of those variable costs are, and then begin to
set targets for yourself, set financial targets, and even by setting them, you're more likely to get to them.
Right. Any other last words of encouragement that you want to say or share? If somebody's been watching this and perhaps they felt that to date they haven't been as on top of the number side of their business as they could be, any words of encouragement to say to them to help them to really make that shift?
Yeah, well, I would say for any of these things, the sooner you start working on it and the sooner you start thinking about it, the happier you will be in the long run. And I know it's easy to say, but man, it really is true. So if you are thinking, you know what, oh gosh, I really didn't set that up right, or I haven't thought about that, or I don't know where I am, just start now. And doesn't need to be perfect even. Even getting 80% of the way there can actually help you a huge amount. So don't be one of those, don't think, oh, if I don't do it all, it's not worth it, I won't bother to even start. That's absolutely not true. And as I say, engage with your accountant. And if you don't have an accountant, almost every accountant I know of will quite happily give you an hour free of their time. And you can get a lot of information out of them in that time. Share your business, share your financial position with an accountant or another advisor, and you should be able to get some really good advice from them.
I think that's such good advice, you know. I think that's so useful, because, and I'd imagine that particularly, well, throughout it's key, but also at those points when you're either wanting to grow or when you are growing, it's really important to understand that, or if you're taking people on, you then need to begin to get perhaps even more of a grasp on those numbers to make sure that you can continue to build the business, right?
Yep, absolutely correct, absolutely correct. Yeah, we didn't talk about earlier, but there's a whole other set of both deadlines and cash flow projections you need to think about when you have employees. So yeah, absolutely.
I tell you what's really funny. I'm just going to turn off another Skype. Somebody's keen to chat to me, but I'm going to tell them that I'm going to ring them in a moment. That's the beauty of live. That's the beauty of live of live TV. Sadly, it's not an accountant or somebody wanting to give me loads of cash. I'm just going to tell this person I'm going to be with them. Hey, I'm going to be with you in just a few minutes because I'm broadcasting live to the nation. So I'm going to be with you very shortly.
Okay.
Take care. Bye. So how about that for live
Brilliant.
TV? But yeah, you were just saying a closing point there, Heather. I beg your pardon.
Oh my gosh, I can't remember now.
You were saying that when people are growing, you were saying that then there's a whole lot of other.
Oh yes. Not to talk about now, but you're right. As each time your company grows and you do new things, there's new things you've got to learn. You don't want to learn everything on day one that's not relevant to you. Don't learn about payroll, taxes, and deadlines if you don't have employees yet. Focus on what's important to you now so you get really comfortable with it. But then I think most companies as they grow do need to start learning new things. So it's not a one-off. It's an ongoing process.
Wow. Well, I want to thank you so much, because I really do feel as though that I've learned a lot from this. And I think that, just pick up on those last words that you said. I think that one of the things about the finance side about business is that you're constantly learning. And one of the good things is that each time you learn a little bit more and the knowledge bank increases and you become a little bit more comfortable, a little bit more aware of what you're doing. And then you can make all sorts of decisions about in what ways you do want the business to grow, or because then you might be comfortable about the business being a particular way or size or shape or particular product, which is really cool. It empowers you even more.
Yeah, you're absolutely right.
Yeah. So are people looking to find you, Heather? What's the best way if people are wanting to track you down?
Oh, easiest way is to go to our website. It's ask-the-boss.co.uk, or follow us on Twitter. I'm @BossHeather.
Brilliant. That is so fantastic. I want to thank you so much for today and for the previous recordings. For people who missed this or you've just caught the tail end of it, you'll be able to play it back straight away or watch it on our website or on our YouTube Soul-Trader.biz website. So if you just search for me and Soul-Trader, you'll find the Soul-Trader channel. I'm not sure what next month's webinar is going to be yet. We'll be announcing that soon. And we'll also put Heather's details, a link to that underneath this particular underneath this particular video and on YouTube, so people can just click straight through to the Boss website. Well, Heather, thank you so much, and it must be really exciting. I mean, just one last thing is that is it really exciting when you're actually able to see, those small business owners who are doing all sorts of things, and as they grow and as they begin to feel more comfortable with their business numbers, and is that really rewarding?
Yeah, it is absolutely rewarding. It is absolute. What's nice about having this knowledge is sharing it and teaching it. And when you see people take it to heart and you see it benefit them, their businesses, but also them as people, it's the most rewarding.
Wow. Well, that's such a lovely point to end it on. Well, I'm going to thank you very much. I'm going to leave everybody and say goodbye. This has been the Soul Trader latest webinar with me, Rashid Ogunlaru, and our guest, Heather Darnell, founder of Boss. And I better go and talk to my client on Skype. So I better get, paid.
Bye, Rashid.
Take care. See you. Bye-bye. Bye.